Friends, here I'm going to be talking about stop loss hunting. Does it really exist? And if it does, what you can do about it? So, there is this belief in the market, and I've heard a lot of people talking about it. I've seen it, I've read it on Google, I've seen some YouTube videos also on stop loss hunting. So, the prevailing uh, myth, if you want to call it, or the prevailing belief system right now is, at least that's what I've read, and I am led to believe that you take any trade and basically a lot of traders take trades on a particular pattern, candle, or on any instrument, and the broker basically knows where all your stop losses are. For example, you're with a broker called XYZ. And so the broker can see all the traders trading on his platform, literally hundreds, and he'd run some sort of query and basically find out where most of the stops are. And then basically he will basically take an order which is opposite to your order, and then he'll make the market go in another direction. So let us say we are looking at car trade here. So let us say that there is this candle that you see. I will zoom in so that it's clearer, right? I'm going to zoom in and show you what I'm looking at. So let's say there is this candle, right? Now, if you see this candle, the volume is 505K, which is almost 3x plus. So let's assume that you took a buy order above the high of this candle and you placed your stop loss somewhere at the low of this candle here. Now I'm going to keep the cursor there. And if you see that the price goes, and we're looking at the daily time frame here, you have one more candle after this, so you're a bit in the green in profit. And then you have basically one, two, three, four, five, and the fifth one is a bullish engulfing candle. So you will say that the broker knew this, and the broker basically caused the market to fall down, and he, along with my stop loss order, which was somewhere here, took out all those orders, and because we knew the SLs, they were there in the system, and then basically then the market goes in the direction that you thought it would, which it has. Now, while this may appear to be true, and while you start believing the myth, the broker is worth a few thousand crores, maybe 10, 20,000 crores. That is really small money to basically move the market. Very, very small money compared to what big money has. And if you think that the broker has the capacity to bring the market to such a stop here and then start moving, then this belief, I don't believe this belief is mistaken. You see, there is a proper place to place your stop loss, and market does go up and down, right? So it's not as if the broker is out to get you. And what if one broker decided to do this, but the other broker may have the stop loss somewhere here, third broker may have it somewhere here, fourth may have hundreds and thousands of orders here. So why didn't the market fall up to here? So you must stop believing all this apparent nonsense. Stop loss hunting may happen, but chances are that your broker is not doing it. Big money can do stop loss hunting, but there's a limit to the type of hunt it can do. For example, there may be orders placed here also for positional investors or long-term investors. Did the market go down up to here? They retrace back to 0%. So it's not like that. Now, here, even if you had placed your stop loss below the EMA 20 here, somewhere here, or between 9 and 20, you would have got it taken out. So this is the way. This is a normal market variation. I hope you're trying to understand what I'm explaining so far. This normal market variation. Now let us look and see whether I can show you some more trades here. Where, for example, let's say you took a trade here at the high of this candle, right? You took a trade at the high of this candle, and your stop loss was below the low of this candle. If you see the market has come down, but still, if you didn't move your stop loss, you are still in the trade, and you are still in the trade, and the market has gone up. So it depends. You see, the price has gone up, come down, gone up, then again come down. But if you entered here and your SL was below here, you're still in the trade. So, what if there is stop loss hunting here? Why is it not here? Sometimes what happens is the market takes huge deep swings in one direction or the other, and then that will definitely be tantamount to hunting, but not necessarily so. If you see the candle and the candle is closing, whether it's green or in the red, it's not hunting. If you see this candle here and you see the wick here, right? If you see the difference between the high, between the low and the close, there's a difference of 30 rupees. So this 30 rupees, if you will, you can say that they tried to go as much down, but they couldn't find. So this, when you have wicks, you and sometimes the wicks are abnormal, then that is a clear case of stop of SL hunting, because there's a huge big wick here. Imagine, and then the price closes up here. So it was just trying to get all the weekends out before the market moves in the direction that big money wants. So this happens, but only sometimes, and it's clearly visible by the wick. Again, let's see an example here. If I had gone above the high here and I placed my stop loss somewhere here, market has come down such a lot, and assuming I didn't move my SL, I didn't fail my SL, I would have still been in the trade if I chose to behave that way. So if you keep an appropriate stop loss, you will not face the issue of stop loss hunting. For example, there's a low here, then you have this candle here, and although this candle is basically an inside bar, but it's green, and you decide to take a trade here, right? I'm zooming in. Again, you decide to go above the high of this candle, and you didn't keep your SL here, kept it a little below this area, somewhere here at 749. And the reason you did it here is because you know that this is a descending triangle and your target would be here. So you kept your SL somewhere here at 745 or something, and you are at this point, and you would have sold somewhere here, or if you didn't sell here, you would have sold at the once you saw that this there was a red candle closure. Then again, you are still in the game and you made some money, right? So again, there's no SL hunting here. Let's see if I can show you something on another chart. If you keep your stop loss with some breathing room, see there are obvious places where the SL will be kept for long uh, and short positions. Now, if you see here, there is a bunching here. I'm going to alt it. I'm going to basically put a resistance here. If you see that, you know that this is kind of resistance, and we are somewhere here at this point of time. Now, you if you see this green candle, it must have, while it was being formed, people would have gone long here because this is broken resistance. And if you see, the volume is also almost double the volume, 47K compared to 25K. So they would have gone long here, basically, somewhere in the middle here, and their stop loss would be somewhere below the low of this candle here. And if you see this huge wick, right? If you went long here, or if you went long here, your stop loss would have been here, and the subsequent red candles would have basically uh, your sell order would have basically triggered a faster impulse reaction of the red candles. Let's look at the contrary. This is resistance. We are at this point of time, and you you know that this has happened, right? Resistance breaks through, and so you decide to keep your SL here. I'm going to make this color red so that you are aware that this is a SL. Now, you sold as soon as price crossed this, you did a short here, and your cover order is here because you know this is the maximum. Now, If you sold here and your stop loss was 497710, if you see here, this has gone up to 5000. This has gone up to 4977 or 4980. But we already had 5000 here. So if you kept your SL here where the price has already reached up to, this is what is called stop loss hunting. Sellers have sold at this point, basically uh, at this point, because they knew this was the highest point. People who sold here and kept their SL here, they have basically, what they have done is basically they have this is called stop loss hunting. Can you see this long wick? Both buyers have been fooled into, and shorters also, sellers have also been called. This is a bull bear trap for people, amateurs who have taken it here. Normally, what happens is when price comes up to resistance, experienced investors or traders will not go long because the chances of the price reversing are high. So this is all amateurish behavior, and the sellers basically who shorted here kept an SL here. Again, they did not keep enough breathing room. But this is clear SL hunting because everybody knows this is the maximum stops. So if you're really intelligent, and if you see here, there is only a 200 rupee difference here. Whereas if you see here and look at the ATR is currently 208.58. So since you know that most of the SL is here, you should have kept your SL with some breathing room, say somewhere here. This is the correct SL which I will change to blue. Had you given some breathing room, you would not have been taken out when you shot it here. This is clear case of SL hunting. It is SL hunting, but then it is at the most obvious place. Everybody and their friends and their parents know that this is the place where the price is maximum touch. So big money will try to take out all the weak players before shorting. And obviously you can short only in futures or otherwise in intraday equity. So had you kept some breathing room, your position size would have been smaller, but you would have been in the trade and you are there. So I hope you understood that SL hunting happens only when there is a clear apparent attempt, and SL hunting will be obviously at the obvious places where everybody knows, even amateurs also know. We sell here, we keep a very small SL, then we get 1 is to 3, 1 is to 4, 1 is to 5. So to maximize the risk reward ratio, you've kept a small SL and you've been taken out. Even if you kept your SL here, which is around 200 rupees, would still have been taken out because it is still not enough. It's an obvious level. So if you keep your SLs at the obvious levels without any breathing room, you may get taken out, and then sometimes you get taken out just because the market behaves that way. But sometimes big money will take you out, or smart money, or smart traders. But basically, smart money will take you out because they are the only ones who can move the market. So if you take care of breathing room, you can use the ATR indicator. You can stay 1 ATR away or 1.5 ATR away or half a ATR away from the obvious spots, not from the point of purchase or sell, not from the point of entry. I am saying you take 1 or half ATR away from the usual spots where normal amateur SL will be, or where the swing high people have kept. Need to keep 1 ATR away, keep breathing room, and can reduce your position size, but you still be in the trade and be happy for it. So I hope you got a good learning. If you like what I taught, please subscribe to my channel if you haven't done so already, and hit the like button to get notified of all new icons. If you have any questions regarding this video, you want me to post a video on some other topic, then let me know. I'll be happy to do that. Happy trading. I wish you all the best, and I'll see you in the next.